Hey everyone, welcome back to Corporate Decoder, the place where we try to understand how corporations play in the big leagues. Today we are diving deep into a giant of the consulting world, Accenture, and their latest 10K filing. So buckle up because we are going to decode what really matters in this massive document. Also, if you are new here and appreciate honest financial breakdowns and company insights, consider subscribing. We also have a Discord community, linked in the description below, where you can chat with fellow corporate nerds. So what is the big story with Accenture right now? They are reporting their financial results for the fiscal year ending the 31st of August 2025, and like any big company filing this 10K, is packed with details. We are going to zoom in on the key numbers, the risks, and what it all means for their future strategy. Think of this as a treasure hunt for the most important business secrets. At the heart of this report is Accenture themselves, a company that helps other huge businesses reinvent themselves using technology and AI. They are talking about their reinvention services, which sounds fancy, but essentially means they help companies update everything from their digital core to their day-to-day operations. They operate in three main regions, Americas, EMEA, and Asia Pacific, and serve clients across 5 big industry groups. Let's cut to the chase, the financials. For fiscal year 2025, Accenture brought in a whopping $69.7 billion in revenue. That is a 7 increase from the previous year in both US dollars and local currency. That sounds pretty good, right? They also snagged $80.6 billion in new bookings though. That is a slight decrease of 1%. Now what does this mean? It means while they are growing and landing new deals, the pace of new deals slowed a tiny bit. It is not a red flag yet, but it is something to keep an eye on. They also invested heavily in acquisitions, putting down $1.5 billion for 23 strategic buys, and poured $800 million into research and development. This signals they are serious about staying ahead of the curve, especially with AI. Looking at where this money comes from, the Americas region is their biggest market, bringing in about 50% of their total revenue. The products industry group is also a huge contributor, making up 30% of their revenue. This shows where their focus and client base lie. Consulting brought in $35.1 billion of revenue, while managed services made $34.6 billion. It is a pretty even split, showing they have strength in both project-based work and ongoing service contracts. Now this is where things get interesting. While revenue is up, their cost of services also increased by 8%, leading to a slight decrease in their gross margin percentage. Essentially, their costs are rising a bit faster than their revenues are growing, which can squeeze profitability. This is mainly driven by higher payroll costs. In simpler terms, it is costing them more to pay their people. They are trying to offset this by improving pricing on the work they sell and by driving efficiency, but it is a delicate balancing act. Accenture's overall operating income increased by 7%, but their operating margin actually dipped slightly from 14.8% to 14.7%. This is partly due to some significant business optimization costs. They had $615 million in these costs in fiscal 2025, mainly tied to a talent strategy that involves some headcount reductions and asset impairments from selling off acquisitions that no longer fit. While this optimization might streamline things in the long run, it did impact their reported profitability in the short term. When you strip away these time costs, their adjusted operating margin actually nudged up slightly. This shows that underlying the disruptions, their core business is performing well. In terms of cash, Accenture is generating a lot of it. Their cash from operating activities jumped by over $2.3 billion to $11.5 billion. This is a strong sign that their day-to-day business is healthy and bringing in good cash. They also returned a massive $8.3 billion to shareholders through dividends and share buybacks. That is a lot of money going back to investors, showing confidence in their financial strength. Speaking of share buybacks, they are actively repurchasing their own stock, which can be a good sign that management believes their shares are undervalued. Their total outstanding repurchase authority is a staggering $7.85 billion. This tells you they are committed to returning value to shareholders. Now, no big company report is complete without talking about risks, and Accenture has a whole list. They are exposed to economic and geopolitical uncertainty, which is no surprise given the current global landscape. They are banking heavily on AI, but this also comes with risks. AI development and deployment are complex and costly, and there is no guarantee their investments will pay off. Plus, there is the risk of AI being used maliciously or generating biased outputs which could damage their reputation and lead to legal trouble. Cybersecurity is also a massive concern as they handle tons of sensitive client data. A breach could be devastating. They also highlight the risk of not being able to find and keep talented people, especially those with AI skills. The competition for talent is fierce, and if they can't keep up their growth, could suffer. And of course, there is always the risk of legal liability from lawsuits or regulatory actions. Let's talk about cybersecurity. Accenture is very upfront about the risks here. They know that protecting client and their own data is crucial for trust. They are investing in robust security measures and training, but the threat landscape is constantly evolving, especially with AI making attacks more sophisticated. They've had incidents in the past, though they say they haven't been material. However, they rightly point out that future incidents could have a significant impact. This is a critical area for them and for all companies handling sensitive information. Accenture Federal Services, or AFS, their government contracting arm, also faces unique risks. Government contracts are often complex and come with strict compliance rules. They can be audited heavily and face penalties if things are not up to par. Recent executive orders in the US promoting diversity, equity, and inclusion are also creating new compliance challenges. Plus, changing government spending priorities and political shifts can impact their government business significantly. This highlights how working with governments adds a layer of complexity and risk that private sector work often doesn't have. Now let us look at their balance sheet and see how they're redoing on assets. Their goodwill is enormous, standing at over $22.5 billion. Goodwill represents the premium paid over fair value when acquiring other companies. This massive number shows how much Accenture relies on acquisitions to grow. While it is not necessarily bad, it does mean their growth strategy is heavily tied to successful integration of these acquired businesses, and if those acquisitions don't pan out, it could hurt them. On the liability side, their long-term debt has significantly increased, reflecting their recent borrowings. This means they are taking on more debt to fund their operations and acquisitions. While they have strong cash flows to manage this higher debt load, it does represent a greater financial obligation and potential risk if their earnings were to falter. Their total debt is now over $5 billion. When we look at the consolidated income statements, Accenture, net income attributable to the company is $7.6 billion for fiscal 2025, which is up from $7.2 billion in the prior year. This means despite rising costs and business optimization efforts, their core profitability is still growing. Diluted earnings per share also saw a healthy increase to $12.15. These numbers paint a picture of a growing profitable company. In the footnotes, we see Accenture has significant pension and post-retirement obligations. This is quite common for large established companies. They have defined benefit pension plans that are underfunded across various regions. While they are managing these obligations, this is a long-term financial commitment that needs careful attention. And of course, the auditors KPMG have signed off on these financials, stating they present fairly the company's financial position and results. They also confirmed that Accenture maintained effective internal control over financial reporting, which is a crucial check on the company's operations. They did flag estimated costs to complete certain technology integration contracts and unrecognized tax benefits as critical audit matters. This simply means these areas required especially challenging judgments from both the company and the auditors. For the tax benefits, they identified a significant number of unrecognized tax benefits for transfer pricing and other intercompany transactions, which highlights the complexity of global tax structures. So what is the overall picture here? Accenture is a massive company with strong revenue growth and a clear strategy focused on reinvention and AI. They are investing heavily in future growth through acquisitions and R&D. However, they are not without risks. Rising costs, cybersecurity threats, and the challenges of managing a huge global workforce are constant concerns. Their heavy reliance on acquisitions also adds a layer of risk. They are still navigating a complex economic and geopolitical landscape. From a Warren Buffett-style perspective, Accenture's financial strength is evident in their robust cash generation and willingness to return capital to shareholders. However, the growing debt and the increasing cost of services for a slightly shrinking margin are areas that warrant close monitoring. Their strategic bet on AI is a calculated risk that could pay off handsomely, but also carries significant execution and competitive challenges. The sheer scale of their operations and the complexity of their global tax structure are notable factors that require sophisticated management. Overall, Accenture appears to be a resilient company adapting to a rapidly changing market. Their ability to secure large bookings and maintain strong client relationships is a testament to their market position. The key will be how effectively they can manage their rising costs, integrate their acquisitions, and execute their AI strategy without major missteps in cybersecurity or legal compliance. It is a constant balancing act for a global powerhouse like Accenture. What is your take on Accenture's latest filing? Do you think their AI strategy will pay off? Let us know your thoughts in the comments below, and if you found this deep dive valuable, please hit that like button. It really helps us out, and subscribe for more corporate insights. For those wanting to dive deeper and chat with us about these filings, join our Discord community linked in the description. Thanks for watching, and see you next time on Corporate Decoder.